Stablecoins are reshaping the global financial landscape, but with innovation comes regulation. The US and the European Union are crafting distinct frameworks to oversee digital assets. For founders, fintech innovators, and investors, understanding these regulatory environments in each of these jurisdictions is crucial for strategic decision-making. In this video, we'll explore the United States Stable and the Genius Acts. We'll also look at the EU's Market in Crypto Assets, or MiCA Regulation. We'll look at the key differences and implications for the crypto industry. So let's dive in. Hey everyone, I'm Corey, a startup lawyer helping entrepreneurs decode law, technology, and innovation. Today we're dissecting the evolving regulatory landscapes for stablecoins in the United States and the European Union. Understanding these frameworks is essential for anyone involved in the crypto space. In this video, we'll cover an overview of the Stable Act and the Genius Act in the United States. We'll look at an introduction to the European Union's MiCA regulation, a comparative analysis of the regulatory approaches, the implications for fintech startups and investors will take us home. So the US approach, we have the Stable Act and the Genius Act. The Stable Act stands for the Stablecoin Transparency and Accountability for a Better Ledger Economy Act. That is a mouthful. So the purpose of this bill is to establish a regulatory framework for issuers, requiring them to maintain one-to-one reserves and comply with stringent oversight. So the key provisions of this bill, it mandates that stablecoin issuers be licensed depository institutions. It requires issuers to hold reserves in assets with maturities of 90 days or less. Now the Genius Act, in contrast, is the guiding and establishing national innovation for a U.S. Stablecoins Act. Now, the purpose of this act is to aim to provide a comprehensive regulatory framework for payment stablecoins, clarifying their classification and establishing oversight mechanisms. So the key provisions: defines payment stablecoins and excludes them from being classified as securities, requires issuers to maintain one-to-one reserves, including short-term treasury bills with maturities of 93 days or less. Additionally, it combines federal oversight with state-level flexibility, allowing smaller issuers to operate under state supervision if the regulatory framework aligns with federal standards. So next, let's shift gears and look at Europe. The EU's approach is the Market in Crypto Assets Regulation. This is also called MiCA. The purpose here is to establish a uniform regulatory framework for crypto assets across the EU, addressing transparency, disclosure, authorization, and supervision of transactions. So the key here is MiCA applies to crypto assets not currently regulated by existing financial services legislation. It sets requirements for issuers and service providers, including capital requirements and investors' rights. Additionally, it imposes restrictions on stablecoins not pegged to an EU currency, limiting transactions to 1 million per day. So let's do a comparative analysis, the US versus the EU stablecoin regulations. So the scope, the Stable Act and the Genius Act, which are going to be combined ultimately into one piece of legislation, they tend to focus on integrating stablecoins into the existing financial system, emphasizing consumer protection and financial stability. MiCA aims to create a comprehensive framework for all crypto assets, not just stablecoins, with specific provisions provided for stablecoins to protect the euro's stability. So now let's look at issuer requirements. Issuers must be licensed institutions in the United States on the US side with stringent reserve mandates. On the European side, in the EU, mandates authorization for crypto asset service providers and specific capital requirements. Now let's look at market impact. The US seeks to bolster the US dollar's dominance and integrate stablecoins into mainstream finance. The European Union, in contrast, implements measures to prevent stablecoins from undermining the euro, including transaction caps for non-euro pegged stablecoins. Okay, so let's quickly recap. The US is advancing with the Stable and Genius Acts that will ultimately be one piece of legislation regulating stablecoins, and it's focused on reserve requirements and issuer licensing. The European Union's MiCA regulation, on the other hand, provides a broad framework for crypto assets and emphasizes transparency and market stability. Understanding these regulations is vital for stakeholders in the crypto industry to navigate compliance and leverage potential opportunities. Join me on the path to decoding law, technology, and innovation to grow your business. Don't forget to like, share, subscribe, and hit that notification bell. Until next time,